Hello, everyone, and welcome to the Trade Ideas Live Trading Room recap for, what day is it today? Tuesday, May the 19th. My name is Barry Anderson, moderator of your trading room. Any questions you may have for me, you can use that email address. This is a link to get into our free room. It is 100% free. You do not have to be a member of Trade Ideas to be in our free trading room. The room is open Monday to Fridays, 9 a.m. to 3 p.m. Eastern Time. I share my screen and I'm live on the mic. In the email you're getting, you will see still a link for the test drive. Now, if you sign up today, you'll only have 3 days left, okay? Wednesday, Thursday, and Friday. The test drive is over on Friday. It will still cost $8.99, so basically $3 a day. But you'll have access to our full premium service just to sort of see what it's all about. And you'll also see a promo for taking out a subscription, a promo code there for taking out a subscription to Trade Ideas if you want to do that right now. All right. Well, I just wanted to show you this trade. This kind of is exemplary of or an example of a trade of a situation where it gets sort of frustrating sometimes. There was T-Bio. I'm going to show you my watch list. Watch list was okay today. 2072 was the alert. Okay. There we are. There's the arrow. So there's the candle in which the alert happened, and on all intents and purposes, 2072, and it got all the way up to 2194, which is over a dollar move, which is looking great. Problem is, it was a very whippy trade. So what happened to me is I actually got into the trade 2113, I think, and then I took a little loss, and I got back in, and I made some money. Actually, that's not right. That's right. It was another one. I got in at 2113 and got out at 2125. And then on the way down, I basically flattened out. And then it went up after that. And then it's down after that. And so you can see this was a very, very, very whippy one to try to trade, even though, ultimately when you see the alert at 2072, making over a dollar, but it was a very choppy one. I mean, look how much it's come back. Now, this is an interesting one. As I was saying, I was warning everybody when I was looking at getting into this one. This only has 23 million shares in the float. So for a $21 stock, that's pretty low. And this is exactly what can happen. So you've really, really got to be careful on something like this. I was prepared to take the risk, mainly because if you look at this monthly chart, this is an all-time high right here. So there's no resistance or anything like that. So I thought, in fact, let's take a look at that daily chart. Probably looks even better. Give you an idea. You can just see it had a huge day yesterday and basically trying to have a nice continuation day today. But it broke out yesterday and again making new lifetime highs. So some of these can be, can be kind of fun to trade when it's a low float situation. But I do find that the higher price ones can be a lot more, up and down, shall we say. The lower price ones, what happens to them is they typically just scream higher, and then when they drop, they really drop. Not a lot of up and down, at least at the beginning of the day. They tend to want to just keep moving higher, and you keep thinking, well, it can't go any higher, so I'm not going to buy it here. Then it keeps going higher. This is one that we were watching just before I look at NNDM. This one was in my watch list early. This had a nice gap in the pre-market. I'm not even sure I see what the news is on this one, but a nice gap in 3D printing. That's right, something to do with 3D printing. And just give me a second here. Breakthrough in 3D printing of circuit boards. Breakthrough of 3D printing of circuit boards. So, it didn't do too badly. I mean, there it is in the pre-market, but it wasn't like screaming higher in the pre-market. The market opens, it pops up, and then it looks like it's over. It's starting to pull back. And then it rested right there. And from there, it just screamed higher. And guess what happened right there? Stopped. Why? Well, the 200-day moving average, if I had my daily chart, but the 200-day moving average is right at 229. It's amazing. Look at this. I mean, almost right to the penny. In fact, right to the penny is where it stopped, pulled back down. And then this pattern right there is something that you guys should be really looking for continuation plays. Now, this is not 100% what we call a red bar ignored. For this to be a 100% red bar ignored pattern, that red bar has to be totally engulfed by the previous green candle. But it's pretty close. I know there's a little topping tail there, and the body of the candle is just, let's see what it is. The high is 229, and the high here is 224. So it's just outside. But boy, once it took out that 200-day moving average, look what it did. But this is a great little pattern that you know, if you start seeing this on charts, especially if you get a few green candles in a row ahead of it, not just one. Because the whole principle or theory behind this is that you've got an uptrend, you've got a pause in that uptrend, and then the uptrend continues. Now, do they all work exactly like this? Of course not. I mean, we'd love to be able to say that. But I mean, you know, your trigger then would have been right around here, right around that 230 mark. And, you know, before it really pulled back, it got all the way up to $4 before it really pulled back. So that you know, you want to, you know, should maybe copy that or print this and put it on your wall. It's not an absolutely perfect red bar ignored, but it's you know, it's really close, and that's the sort of pattern that we love to see. All right, everybody, I want to get back into the room, so I'm going to bring back the capture program. So if you have any questions for me, you can use this email address. This is a link to get into the free room, and I'll open the room tomorrow at 9 o'clock Eastern. I hope to see you then. Bye.